Hey guys, what's going on? Welcome to the video. So we're seeing some volatility pick up in the market, and this will be an important video to watch. So in this one, we're going to be going over the S&P 500 and what to expect next from the indexes, as well as what to expect next from Bitcoin on this current large dip. We're also going to be going over two major breakout setups to keep on close watch in the week and weeks ahead. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart. In last week's video, we went over how 645 to 646.2 had been the top of the range, and a break and hold above there would trigger further upside into new highs. We also went over how 642 to 642.85 and 639.85 were key supports below, which needed to hold in order to keep direct upside in play. What played out was a small early week pullback, which successfully backtested 642 to 642.85 as support, and then rallied back up to 645 to 646.2, which was able to break above it and hold as new support once it did so. It made a new high at 649.48 before Friday's pullback, which failed back below 645, and then it found support just above 642.85 and held 645 as new resistance. So into next week, it's essentially the same outlook as last week, and in order to reattempt the breakout, the SPY would need to break back above 645 to 646.2, which could then target a move back to highs at 649.48, and along with that, I would watch 650 to be an important cycle level. Above there sees upside into new all-time highs once again. And key support levels below are at 642 to 642.85 and 639.85 once again, and if there was to be a fail back below 639.85, it could then target 637.58 to 638, and then likely the recent swing low below there at 633 to 634 next before further downside if that was to break. Overall though, we should continue to lean bullish as long as it's above 639.85 and no real bear case until a good amount lower. So now taking a look at Bitcoin, last week we went over the failed breakdown of the key 112,000 level, and that played out perfectly for a quick upside trade. And then we also talked about how after that rally, Bitcoin is back in no man's land, and this was an area that we did not want to initiate trades from. We also went over how that key $112,000 level had been well tested, and for the bull case, buyers would not want to revisit that level as a lot of demand has been drained from there, and there would be high odds for a break below it, which would trigger the breakdown of the range. And after revisiting 112,000, the breakdown played out and is now following through lower after failing to reclaim back above it. So as I'm filming this, Bitcoin is at about 108,000, which is currently not a conviction area to initiate trades from. We could watch 105,000 to 109,000 as a notable zone where a majority of the volume took place from early May to early June, though it's not a high conviction area to expect a strong reaction from. It's more so a zone where some dip buyers likely come in at, and maybe it builds out a new consolidation around here. But Bitcoin is notorious for being traded with leverage, and when big downside moves happen, it can lead to liquidations of levered positions, ultimately resulting in a big dump. So if that scenario was to play out, I don't necessarily think this is likely, but if we do get that large liquidation, the backtest of the previous key trendline and breakout trigger would be a high conviction spot to buy the dip, and this would line up with about 102,000 to 103,000, and also slightly below there is 100,000, which also is a major level, and that can act as another major support if tested, and a backstop type level for any dip buys to play with a stop loss below there. So to wrap up my overall thoughts on Bitcoin right now, for those who are looking to increase their long-term position in Bitcoin, this 105,000 to 109,000 zone is a totally fine area to start averaging in after a 13% plus drop from highs that were just made a couple weeks ago. In my opinion, it is more likely than not for further downside from here versus a quick reversal back up, so keep that in mind. If there is that dump and liquidation type drop, then 102 to 103,000 would be the high conviction spot for either a trade for a relief bounce at the minimum, or a great spot to average in heavier for those looking to build out long-term positions as well. So now getting to a couple of trade ideas for the week and weeks ahead, and these are both stocks with well-defined breakout levels, which makes them high conviction setups if they do break. Some other high conviction setups that we've gone over within the past couple months include Coherent, ticker symbol COHR, which went on a 47% upside move from the breakout point, Astera Labs, ticker symbol ALAB, which went on a 99% move from the breakout point, and Celsius, ticker symbol CELH, which went on a 59% move from this breakout point. What these all had in common was a large consolidation pattern with a well-defined breakout point. Not every setup like this will break out and play out, but it's important to keep them at the top of your watch list for when they do, which could be at any point. So first up is Zillow, ticker symbol Z, and overall the stock has built out a multi-year rounding base pattern that has been forming since 2021. It currently has a well-defined breakout level and top of range at 89.4, which can trigger the larger breakout above. So this can be looked at in a couple different ways. It can be viewed as a close to 4-year long cup and handle pattern, with the handle being built out since late 2024 and all of 2025 so far. And also, if we zoom in, the handle of that long-term pattern could also be looked at as building out a cup and handle of its own, especially if it builds out a longer consolidation on the right side of this. Cup and handle patterns can be very explosive, and these 2 patterns in 1 type setups can add to that explosive potential. So once it breaks above 89.4, it can trigger the breakout and see a very large move if that plays out. And the upside targets above there would be at 100 to 104.15, and then 119.7 to 125. Dips can be of interest to buy at support levels below, but the easiest way to trade setups like this is to enter on the break above 89.4 with a tight stop loss back below. As when you buy the breakout, there's no wasted time. You'll find out quickly if the breakout will work, or if it doesn't work, you can either take a small loss with your stop loss if it doesn't work, and if it does work, you just enter a trade that's going to make you a lot of money very quickly. And another well-defined setup to keep at the top of your watch list is Abercrombie & Fitch, ticker symbol ANF. Now this does not seem like the type of company whose stock can make a very large move, but I think a lot of y'all would be surprised with what technicals can do. One of the biggest things I've learned from trading over the years is not to overthink about the underlying company behind a stock, as the chart tells us all we need to know, and focusing on the technical chart will make you the most money. So for example, Abercrombie's breakout in 2023, which was triggered above $49 per share, went on to make a 300% plus move in just 9 months. This shows the type of power that breakout setups can have. Stocks you wouldn't think that can make this type of move, such as this one, can, all just from a simple range breakout pattern. Alright, so now taking a look at the current setup, there are 2 very well-defined resistances and breakout triggers to watch on this. And these include the 200-day moving average, as well as 105.1 to 108.35. These are the top of the range and have been well-defined with multiple rejections so far, so we can expect a strong breakout reaction if there is a successful break above. This current consolidation pattern can also be looked at as a rounding base or cup and handle pattern. It doesn't matter what you want to call it, as all these type of patterns symbolize as accumulation, and with a well-defined breakout level above is exactly what we want to see. So we can watch a break above those resistances to trigger the breakout, and it can be viable above either one, the 200-day moving average or 108.35, but you want to play with a tight stop loss back below whichever you buy it from. And a successful break can target 121.3, 130, the 149.95 gap fill, and then 160 as those target levels above. So that's everything that I'm watching for in the week ahead. There could be some more volatility picking up in the market, so those key levels on the S&P will be important to note, as well as the intriguing dip on Bitcoin and those big breakout setups to keep on close watch. As always, thank you guys for watching. If you're anybody interested in joining the private Discord group, to get my personal trade alerts, nightly watch lists, and answering your questions you guys have in there, that link is down in the description below, and thank you guys for watching. I will catch you all next time. Good luck trading the week ahead, and peace out.